Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday as we had our live trade room at TradersArmy.com. So some of the lines are from that area in case you missed it. So let's go ahead and dive right in as the S&P this morning is up about 5 points. We continue to rally, got to a brand new all-time high. You know, yesterday one of the levels that we looked at was a potential hourly reversal at this zone somewhere up in here. Now, this wasn't the best time of day, so going into this level, this had to be a confirmation entry. We actually did get a little confirmation entry out of that zone as price popped into here and then moved away about a 1-to-1 from that area. It just wasn't able to hold it, right? So that's okay. That's really the only way that you're gonna take a flyer, if you will, at some of these in an all-time high. Now we're setting a new all-time high in the overnights. Last night, once again, same rules kind of apply. That if we get a little bit of basing below that all-time high, you can look for a breakout kind of above there. We had a little bit of a sell-off last week on Friday afternoon, so keep an eye on that as well. We could have a little bit of a sell-off in the afternoon, a little profit taking, and if that's the case, we would look for a breakdown. So I'm not looking really for a lot of reversal trades today unless we make it down to this region here. That would be an opportunity to get long somewhere down in there. You do also have this area right in here, which was this little move up, but this is kind of a retest of this area over here to the left. So I like this one down here for the reversal. There's not a whole lot of reversals I want to add that are much closer. Next, in the NASDAQ, very similar picture, not a whole lot different. Once again, same thing. If you like the, if you want to try a long, looking for basing below this all-time high and just getting long above that 96.57 area, I think makes sense. But keeping your stops fairly tight, knowing that we could get that Friday afternoon sell-off. Looking into crude, so crude oil, we're beginning to rally a little bit more inside of crude. We've come up to the area where we would anticipate a potential confirmation short entry. That confirmation short entry, we've not traded deep into that area yet to get us the in, but we do have basing below the level. So with that basing below the level, that takes this confirmation short entry and makes it that much weaker. It's a less probable trade when we have this level of demand that close, because what it does is it erodes the potential you have on reward to risk. So I'm going to take these lines off the charts, and I'm actually going to take a look and say that it might be worth getting long if we do retrace this as a speed candle, right? And oftentimes speed candles get retraced. So we could have a little reversal back into this region in here. This one down here is another one where we could come back in and retest. But we're starting to see demand areas formed in crude, which we hadn't seen for a while as it's continuing to rally back up. Next would be gold. So gold, first of all, on Monday, we talked about an iron condor in gold. So leave me a comment down below if you got that iron condor in gold on Monday, because today would be the expiration. It was a 5-day iron condor. Today would be the expiration day for that 1540 by 1605. Let me know in the comments down below if you're able to catch that IC. And if you were, you've got expiration today. Now, I will say that we have 2 levels here of demand down below us. I'm not as big of a fan of this front one because of the time of day that it was formed. The one below is at least a market close. So looking at this first level, what I will probably do is take this to a confirmation entry because the quality of the level is good as far as the structure, but the time of the day I'm not a big fan of. And so looking at it, a limit entry down in here and then one up above us, and we're still in between those wide areas. So as of Sunday, we'll pull those lines off. That would be the expiration of that iron condor. And by the way, if you don't trade options on futures, I'm going to pin a link down in the comments below to an options on futures session that we did. It's a class that we have over at tradersarmy.com, totally free class that we did on options on futures. You can go and take a look at it and give me your thoughts. All right, let's move over to the bonds and currency markets. So looking at our bonds and currencies, we're still kind of in between some levels in the bond and currency markets. Yesterday we had taken a look at these levels where we had this strong rally up and then this one with this big move down, and these two lines in between were targets on the long or targets on the short, and the market didn't come to either one of them. Didn't get an opportunity to jump into either one of those. So for now, I'm going to remove both of those levels because all we're doing is basing in between both of them. We looked at both a long and a short, and neither one of them really gave us much of an entry. And so I'm just going to stand pat and just take no action on this thing until we get through one of these levels of demand or these levels of supply. I don't think there's any reason to force a trade in the bond markets. I think you'd just be forcing it at this point. In the Aussie, we have a little bit of pinching kind of going on through here where the markets dropped, we rallied up through here, we started to base. And so now as I look at it, after we saw that kind of pinching levels occur, now what I've got to do is see where do we see a potential for the next move. I think there's a potential for a breakdown right inside of this region here. And with that potential for the breakdown, we could look for a short below this area in here of 67.13. Provided we get the basing in front of it, we still need to get clean basing, but I think that makes for a decent breakdown from that zone. In the euro is continuing its move down. Anybody who, by the way, so here's something to consider. We looked at a short on the euro. If you go back and look at our daily market commentary, we looked at a short in the euro here, and the market has continued to move down. Then we had another breakdown here, and we've just kind of continued to run. So if you held this thing throughout the week, that's really the best trade, right? Holding this thing throughout the whole week, you've been able to run it the whole way down, as we have not yet come back in and retested any areas of demand. So now, as I look, I don't have any quality demand until down here. This demand was identified a long time ago, and it's a gap fill area. So keep an eye on that. I think there's still chance for price to run down. If we get another bit of basing in the hourly, we'll probably come down again. There's no reason to think that won't be another opportunity to get short below there. Next, Canadian dollar. So looking at the Canadian dollar, we've gotten a little bit of base here, rallied up on the Canadian dollar. We've got some areas of supply above us to be aware of, where we're seeing some basing here in front of them. That's why this one's a confirmation entry, and the area of demand down below us in here as we're building a little bit of a base. Our 4-hour chart is showing some strength. We got a higher swing high and a higher swing low, very clear higher swing high, higher swing low, and so makes these a little bit less probable as supply levels up above us. Moving over to the Great British Pound and Japanese Yen. So in the pound, we had a level yesterday for a potential reversal. As price came into the level, and then, knowing our rules, 1, 2, 3, 4, 5, after 6 candles, the market had gone absolutely nowhere. Now, technically, if it goes nowhere, you might want to close your position, and so you may have gotten out with a small loss, a little bit less than, frankly, what your stop out would be. Your stop out would have to be way up here. But if you stayed in it, you are actually still in the position because you didn't come anywhere near your stop. At this point, I would take your stop at the very least and move it a little bit lower to probably above this pivot just to minimize that exposure. But this was found off that little wick over wick level. Down here at this 1299 is the target, and this actually now becomes an opportunity to get long if indeed price comes back up. And then the Japanese yen, We are in between levels. We did give it a touch and go off this area of demand, but it's really, we didn't trade deep enough in it for any sort of an entry. And so now, kind of looking at it on the big picture side, I want to keep an eye on, do we get basing right at this area? And the reason I'm looking at this area here is we had a little bit of demand here. It acted as support back through here. If we get basing here, I think you may get a little breakdown opportunity in that Japanese yen right in that area. So, and then nat gas. This is our nat gas level from that we had identified yesterday. For those of you that trade the natural gas markets, we rallied up into supply, and then it came down to demand, and now price is rallying up off of demand. So it's kind of bouncing between the two inside of those markets. So hope you guys have a great weekend. If there's anything I can do for you, please shoot us an email, support@tradersarmy.com. I will talk to you all soon. Thanks so much for joining. See ya.